Good afternoon, good morning, good evening, whenever you are watching this week's weekly video. What up, y'all? I done took some naps. I done went to sleep. I done got some rest. And I'm back on these tax returns. Why? Because tax season is all year round. It is. It really is. We got through the tax deadline. Thank you, thank you, thank you, thank you, thank you. We were able to file extensions, and we are now actively working on those extensions. Y'all, last year this time, I ain't gonna lie to you. I said we gonna get through the tax season. I ain't gonna work for 2 weeks. We gonna hit it back in May. But I can't leave well enough alone, and I can't sit still because I be curious as to getting stuff off my plate so that we can get stuff done. The weather is warming. My shoulders is out. Only if my sexy shoulders will make my belly flat. My shoulders is out. The sun is shining. My melanin is popping. Come on, somebody. My melanin popping. And we are getting ready to get through the thicker stuff. Because of how I sit in this office and where the sun is and when we record videos, baby, I'm going to have to pick it when it's not too hot. So we're going to get into things. Last week, we did a comparison to tell you about how qualified dividends versus ordinary dividends are handled. And this week, I told you I would go through a worksheet. And so I looked for a 2024 worksheet, and I ain't gonna lie, my resources could not find it, probably because my brain needs some snacks. I told y'all, I don't operate too well when I have not had enough snacks. But I was able to find a 2023 worksheet. So I'm not gonna leave y'all hanging. We are going to use one of my favorite resources when it comes to research tools. It probably is my go-to, and no, it's not chat. It's not the chat GPT, even though I do like chat GPT to have conversations with when I'm trying to bounce ideas off and I'm stuck. However, when it comes to the tax book, I have been using the tax book for years. I do like illustrations in it. I have actually taken pages out, sections to be able to help clients understand aspects that pertain to them when it comes to a particular tax situation that handles or is working for them. Every year they update it. I never have gotten a hard copy book. I've always gone on the web library, and I'm is that how you say it? Library. Y'all know what I'm talking about. And so today I want to walk you through what the worksheet looks like. I have not filled it out. I told y'all we gonna stretch this. We gonna stretch it, right? Remember last week we talked about qualified dividends functioning more like our capital gains, our long-term capital gains, right? And so therefore, this is what the worksheet is going to primarily talk about. We're going to do a twofer, and then I'm going to end up going back. But our whole series is talking about passive income. So let's not hesitate, right? Let us get there. All right. Y'all can see the screen. And y'all can't see me. All right. So hopefully it's always, y'all know, I don't see it till afterwards. I really don't pay attention to that. Hopefully this is big enough for everyone to see. Y'all will see I am in my actual the tax book account. And we are looking at the 2023 qualified dividends and capital tax worksheet. I really want y'all to, we're going to go through it high level. Let's unhighlight my search terms. Did it work? Bump. All right, because I was searching for it. And then I'll file it. I will find an illustration for you all next week. All right. So what we gonna do? What happens if I do this? Is it gonna make it open the file? I don't want to open the file. I don't want to download the file. Y'all pay no attention to me. All right. So qualified dividends. This is a worksheet that's going to end up rolling information to the front of your tax return. Now it does say 2023, but the gist of everything works still for 2024 and moving forward. All right. So enter the amount from Form 1040, line 15. Now, the lines change from year to year, y'all. However, filing Form 255 related to foreign earned income, enter the amount from line 3 for foreign earned income. All right? So, after we do that, we're going to enter the amount from 1040, line 3A. And I'm going to go pull a 1040 for y'all momentarily. And then it's asking, hey, are we filing a Schedule D? And a Schedule D is for when we have capital gains, right? So when we're doing our stocks and we're trying to figure out losses and gains, etc., that's what our Schedule D is. So is a Schedule D being filed? Sometimes the Schedule D has to be filed and sometimes it does not, right? So then we're going to add these lines together. We're going to subtract line 4 from it to figure out what we're working with. Now, when y'all be hearing me say the queen be phasing you out, she a phase out determiner, this is why. Because y'all start seeing right here, if you single, we got single or married, found, and separate, we got some limits, right? If we married, found, and jointly or qualified surviving spouse, we're going to have some limits. If we got a head of household, we're going to have some limits. This going to happen because you're going to see this again. They're going to tell us to enter these numbers based on our filing status. Filing status matters, y'all. Now, I'm getting ready to let y'all see my face because this has nothing to do with what we doing over here, okay? Come on, computer. Where's my mouse? I need y'all to see my face real quick. This is the reason why filing status matter. Because y'all be out here jacking filing status up. Y'all will put one filing status on your W-4 or on something, you know what I'm saying? Mainly your W-4. And then you turn around and you file a tax return a totally different way. It ain't gonna math. The math not gonna math. You got to, whatever we picking for a filing status when we file a tax return, that need to be the filing status that show up on your W-4. This is a public service announcement that don't have nothing to do with these qualified dividends. Okay? I need y'all to be consistent, and if you're not sure, I need y'all to go look at your W-4s now. Reason why is because we just filed taxes, and I do not want y'all to get all the way to the end of the year and be having sticker shock and be asking me the questions. Now back to our regularly scheduled programs. All right? Come on, regularly scheduled. My tech be doing a little bit of dramatic pause on me. I got to make my stuff work faster. Come on the screen. Y'all probably like, that was the longest. We don't see nothing. The screen black. I know. I see y'all. We back, baby. We back. Okay. All right. Then it say enter the smaller of line 1. All right. So the amount from line 15 or line 6. Now we comparing these dollar amounts because they gonna matter, right? Then it say enter the smaller of line 5 or line 7. Now you're like, wait a minute. Now we comparing and comparing and comparing. Yeah. Now enter the smaller of line 1 or line 4 because we added some stuff here. What's on the schedule D's and what's going on? Do we got income tax or interest? Now enter the amount from line 9. Subtract line 11 from line 10. Now, here come when we really phased out. This is when the queen show her butt. All right. Now you got your filing status come back up again, and we got to figure out what these limits are, right? Depending on where we are. You got to enter these amounts to figure out what we're going to do for percentages. So in 2023, for single, we're going up to $492,300. Married, found, and separately, we're going $276,900. That's about half of this, right? Married, found, and jointly is both. Had a household, $523,050. We're going to enter whichever one is smaller. Very rarely will you hear us use the smaller. We use the lesser than when it comes to, what's my thing? Underpayment penalty, and then you see we're using it here, right? Because they ain't going to let you get everything. Because most people's income don't, I'm going to say most people, right? I'm not going to say, if it don't apply to you, please don't get mad. Most people income don't get here, right? So we adding these up, add lines 5 and 9 together. What's 5? This right here, subtract this. We're going to add those up, right? And then subtract line 15 from 14. Boom. And enter the smaller of line 12 or 16. The reason why y'all are like, why is we doing all this? Because remember I told you what the income limits were. Really. We trying to figure out, are we paying 15% on these qualified dividends? Are we paying no money on the qualified dividends? Right? Or if we're paying 20% on these qualified dividends and capital gains. That's really what we're trying to do. So we're trying to get our amounts together so we can do this for 15% or 20%. And then from there, you're going to compute the tax from the amount that's sitting on line 5 If the amount is less than $100,000, then we got to go to the tax tables. Because now we got to go compute what the tax is on that amount. If it's more than $100,000, we got to do some calculations. Why do I tell y'all that? I'm coming back. We're not going to go back to the worksheet. I'm telling you this is because if you're one of my clients, you hear me say the tax tables phase out at $100,000. Boom. And I'm going to take this down and we're going to use real numbers and we're going to do it next week. Y'all see I'm stretching it out, right? But once you see it all plugged in, you'll be like, oh. Because if you go back through this worksheet, and we'll put a link in this because this is an old one, right? I'll download it so you can see it and say, look, remember I told you the 3 different levels for qualified dividends is 0%, 15%, 20%. That's actually the same when we're talking about capital gains tax, 0%, 15%, 20%. And so you need to know what that is because we got to figure out, well, how much is actually being taxed. This is outside of everything else that's showing up because we actually got like creating tax on the regular income. And then we got to take these qualified dividends and capital gains and create another tax and figure out where that amount gets to. And so this is why sometimes your number don't, when we get to taxable income, your number don't perfectly fit into my table that way. Aha, right? Aha. This is why sometimes that number don't perfectly fit because we do have progressive tax and we're calculating stuff at so many different tax levels in the same tax return that these worksheets matter. If you are a client that has either capital gains or dividends, I want to encourage you, and you're one of my clients, or you've been working with somebody else and you're looking at this, look and see if you got all your worksheets in the back of your tax return. I know for me, I give the worksheets to my clients because I want them to see it so we can have discussions if they ever have any. I'm going to go and I'm going to next week actually fill one out based off of just random numbers because I don't want to, I'm not going to do anybody else's. I might pull it. Yeah, I'm going to do it from somebody else's. I was about to say I was going to pull it from TTE's corporate return because I might use those numbers from it so you can see how it's calculated. But how qualified dividends and stuff like that works for corporations and businesses is a little bit different, but not by much, but a little bit different. And so I really want us to understand, hey, you think we got it going on here. There's other calculations happening in the mix of, in the back rooms, in the softwares, and in reality, let's think about it. If the only income you had earned as we get to our older years, or even for some people that are younger, and they like, I'm not taking a traditional job, and I'm not doing W-2 earnings, but I'm going to sit up here and I'm going to learn how to leverage and get passive income as my primary income. When we're doing that, and I'm going to, make money off of this and buy and hold it for a year and a day when it comes to capital gains, etc., our qualified dividends, I'm going to, what did we say? 60 days plus, right? My tax can be so much lower overall because we're talking about 0%. We're talking about 15%. We're talking about 20% tax. Whereas you're looking at it as ordinary income tax rates are much higher than that. We're going to break this thing down so that you can understand how it really works and how you can leverage this stuff so that it benefits you all the way, so that you can start to say, you know what, as I transition from W-2, maybe I do want more passive income. It's almost very much like, I'm not even gonna say it's almost like, if any of you all have read, and they're not a sponsor, but this is one of my favorite books from the Rich Dad series, is Cash Flow Quadrant. If you have not read Cash Flow Quadrant, that was the book that the light bulbs went off for me. That's the second book in the Rich Dad series. When you understand the what they have is just trademark, that quadrant, employee, self-employed, business, investor, if you go through that book and you're like, oh, how do I hop from this quadrant to this quadrant? It will be like, I get it. Now that book is talking about real estate and all this kind of stuff, but it'll open your mind up to be thinking about, passive income. How's this being done? What should I do? How should I not do it? Those type of things. All right. So because I couldn't find one that's filled out, I got to find one that's filled out, or I got to fill one out live. then that will be next week's homework, and then we'll jump into uh, capital gains. And I know y'all probably like, what? I'm gonna keep this serious because normally I do a wrap up in April and for each month. But next week we gonna stay on this passive income, y'all, because we gotta figure out what's going on and demystify this code so that we can get it. All right. Until next week, y'all see these melanin shoulders. I'm gonna holler at you. Peace. Hey, y'all probably like, why is she shimmying? There's no music. I'm out.